Do I need to pay estimated taxes when selling my house? Sold your house this year? Wondering if you owe estimated taxes right now or can wait until you file your return? Let's break it down with clear IRS rules, so you don't get caught with a penalty later. Step 1. Home Sale Exclusion. The IRS gives homeowners a major tax break under Section 121. If you lived in and owned your home for at least 2 out of the last 5 years, you can exclude up to $250,000 of gain if single, or $500,000 if married filing jointly. That means if your gain is under that limit, you may not owe any federal tax at all. Step 2. What if part of the gain is taxable? If your gain is above the exclusion, the extra is considered long-term capital gain. Capital gains are taxable, even from your primary residence, once they pass the exclusion amount. Step 3. Estimated taxes. Now the big question. Do you have to pay estimated taxes? According to IRS Publication 505, you must make estimated payments if you expect to owe at least $1,000 in tax for the year. To avoid penalties, the IRS requires you to pay the smaller of 90% of your current year's total tax liability, or 100% of last year's total tax, 110% if your adjusted gross income was over $150,000. Step 4. Due dates. Estimated tax payments are due quarterly. Because your home sold on July 1, 2025, that falls in the third quarter, so if you owe, your estimated payment is due September 15, 2025. Otherwise, you risk an underpayment penalty when you file in 2026. So here's the takeaway. If your gain is fully excluded, you may not owe anything. If your gain is taxable, you likely need to make an estimated payment by September 15th. Want personalized guidance? Every situation is unique, so please reach out to your own tax advisor before the deadline to make sure you're covered. Don't wait until tax season for surprises. IRS topic now. 701 Sale of your home. IRS Publication 505. Estimated tax. Please like, share, and subscribe for more simple tax tips.